Hi, guys, and welcome to the Penny Lane podcast. This week, I sat down with Jason, aka the Wolf of Weed Street, and we talked through a lot of topics, most notably how he pays himself and reinvests his money into companies he believes in, as well as the future of psilocybin stocks, which you guys know I'm so into, and his tips for trading options. So I hope you guys enjoy this episode, and we'll see you soon. Jason, the Wolf of Weed Street, welcome to the Penny Lane podcast.
Thank you for having me. Excited to be here.
I am a big fan. I have always been a big fan of yours. And then I think I learned more from your Pennies Going in Raw episode than any of the other episodes. In fact, I was really pissed that you didn't win the bracket.
Well, it's tough competing with the Atlas boys.
Right, sure. And then you led off Kenny Powers' podcast. I mean, you're on the podcast circuit, and I'm so happy to get some time with you.
Yeah, I'd love to have my own podcast, but I'm too lazy.
I get.
So it's just a lot easier for me to just do other podcasts. And I'm always like, because, people reach out, they're like, hey, I want to do a podcast. And I was like, look, you set it up. I'm like, you do everything. Just tell me when to show up.
Sure.
Like, they never go for it.
So you would be great on a podcast. First of all, your voice is great. Second of all, you and your background it's made for TV and audio. So I'm into that. And then you've been doing this for a long time, right?
Yeah. I mean, I started investing, I should say, in the spring of 2013. Like right as I was getting engaged, I was like, okay, it's time to stop being such a cowboy, with a simple thesis of, what's the world going to need in 10 years? And I was investing in really good companies, had I held them.
Sure.
First company was, I still remember, it was a company called Energy Recovery Inc. That was the first company I ever bought. It was a desalinization company. And it was like $3 back then. It's like 20 now. And then, I was just kind of like, is this it? Are these the returns? And I was still doing good. I'm like, I made 30% on this. And I was like pissed about it. And, I talked to my sister and she's like, if you had your money in a hedge fund, that would be an amazing return. She's like, it's just because you're starting out with a little bit of capital. So I was like, yeah. And then, I found pot stocks by chance. And I'd never bought a penny stock in my life. I mean, I was so wet behind the ears that when I saw the ask and it was like 10,000 shares, I was like, do I have to buy the whole thing? So I was like, what? The limit order? I'm like, all this stuff. And then I bought it and then it went up like 50% in 2 days. And I was like, yes, this is exactly what I was looking for. And then it dropped 50%, like the following day. And I was like, well, what the hell happened? So somehow I lost $150. And I was really just hooked on the volatility, after that.
Sure. Been there myself. My favorite story like that is I was in Atlas when I first started trading. And I think PJ was like, whatever the ticker long. And I was like, oh, that means that he's going to buy this and hold it for a long time.
Yeah.
I actually would love to talk about your fiance, who is now your wife. Yes?
Sure.
Okay. So she has been by your side the whole journey, right?
Yeah, the whole time.
Now, does she invest?
Yeah, she does. We do it together. And because I had another job, I had a really stressful job when we, got together, and then when we got engaged, like very high pressure, high stress, like lots of sadness. because I was, essentially going from disaster to disaster. Sometimes I would chase a storm, sometimes an earthquake would hit somewhere, and then they'd like just drop me somewhere, or a wildfire or whatever.
Wait, what was your job?
I worked for one of the biggest disaster recovery firms in the world. So if you think about like worst case scenarios, like, the firm that I was working for at the time was the first firm to go into, ground zero, first firm into the Pentagon, does all the FAA contracts for airline disasters. They did the whole recovery for Oklahoma City bombing, stuff like that. And then, hurricanes and tornadoes and stuff like that. And guys like me were basically just closers. We'd come in and we weren't talking about like small projects. This isn't like something like, Service Master or ServPro when you have a leak. These were, 100 million and up projects. And, we would come in, explain to a board, if they had a board, usually they did, what we could do, how we would deploy, and that we had the manpower to pull it off and mitigate any further damage. So guys like me, we worked on a base salary with a commission. And, your commission was upwards of 5% of some of these projects. Like when Hurricane Ike hit, which was 2008, one of my coworkers signed up Galveston University Hospital. It was a $217 million project.
Wow.
And then you do the commission on that, and I had some bad luck during Hurricane Ike because that was it. I just wanted to work one hurricane and then be out. And I signed up a $30 million project in my first week. And I was like, I just made $1.5 million. And I'm like already spending it. And then the next day I signed up a $17 million project. And I was like, I'm just seeing like dollar signs. And as we're going to roll, trucks onto the property, they were like, and this is when the whole financial crisis was about to happen. And they were like, this is a Lehman property. So they couldn't even pay the deductible to get it going. So I was like gone. And then the other one, like it took a year and a half to get paid like the first third of it. And then FEMA just declared it a disaster zone. So I was doing this. And then at some point I found trading while I was still doing it. And then right before we were supposed to get married, the company's like, we're relocating to Orlando. And I was like, well, there's no way I'm moving to Orlando. I'm about to get married.
Sure.
And, my wife has a career, on top of it. And, she was really supportive. And she was just like, just do it, like see what this, these pot stocks, where it brings you, like what's it going to hurt? You can always, get another job. And so I did. I was doing the responsible thing. I applied. And, at the time, Colorado had just gone legal. So, I had invested about 10 grand at this point, in like the first 6 months. Then Colorado went.
Question. Have you ever invested in any like part of the weed industry, like a grow? Yep. Or a company or any other way other than stock.
Yeah. I mean, that's a thing that I guess, I don't broadcast it, but yeah, I've took part in investments early on, cool. in states. Well, it also gave me, a unique perspective. It's kind of like, I don't know if you ever saw when I had my beef with MedMen. You could Google it, if audience, just Google my name and MedMen, and there's a bunch of articles. So, a company that I had invested in was an edibles company, and they weren't getting paid, and they reached out to me. They're like, I'm like, what do you want me to do? And they explained the situation to me, and I was like, man, this is really shady. So I kind of took a deeper dive, and basically They had no money. They were taking product, signing for it, and then canceling the check. And then they tried saying, hey, we're going to pay you with weed or stock. And I was like, you do not take stock from this company. It's worthless. It's going to be worthless, which they were offering the stock. It was like $1.25. Now it's at like 33 cents. I'm like, one, you're never going to be able to clear it, unless it's free trading and they give you just a ton, and a huge premium. I'm like, you cannot do it. And the company fought with me, and they're like, oh, we're going to sue you. You're going to get sued. And then, obviously the shareholders, you're lying, we're going to sue you. And then I was like, okay. I was like, sue me. And I doubled down, because what they didn't know is that I had all the documents of all the shady stuff that they were doing. So, it's kind of seeing stuff like that and understanding, one, like how the business model works, and then even understanding the construction side of some and these aspirations. And I'm like, and that's actually how I was outed as the wolf, is because I set a company. The company was Creative Edge Nutrition, which was FITX. The CEO was Bill Shaban, and they said, oh, we're going to be the biggest, marijuana producer in Canada. And I was like, they've got this amount of money. I was like, they have to do this. I'm like, they've got to dig up the city for power, for wastewater. I was like, they don't have the money to cover this. I was like, this is a scam. I was like, this is, they're like in the first round of licensing. And I called it. I was like, look, this thing's dead money. So he accused me of manipulation. And I met him actually at a conference, and he outed me. He put my home address, on the Facebook groups, on Twitter. And this is how dumb the shareholders were. They tried to come to my house and steal my car. But where I lived at the time in downtown Fort Lauderdale, all the houses looked exactly the same. They went to my neighbor's house, stole my neighbor's wife's car, and left 4 buds of weed on his dashboard. And he was like, this is so weird. He's like, why would somebody leave weed on my dashboard? Like, calling card. And I'm like, yeah, man, that's really weird. My wife's like, don't tell him what you do. So,
oh, I love that.
So I digressed a bit. So I was applying for other jobs, and then I got another job offer, and I was like, sorry, this isn't enough money. And then they came and they bumped it up 50%. And then that started, I was like, these companies really take advantage of people. And I'm like, but now, because I'm in a position where I can say no, look at what they just bumped everything up. And then the day that I had to give them my answer, it was a Monday, and it was 2 days after my wedding. And on that Monday morning, I'd made like I remember I made $17,000 trading penny stocks. And I was like, I'm sorry. It was, and the crazy thing is now I'm friends with the owner of the company, and, he's like, what should I be buying?
Oh, sure. Real power dynamic switch. So you started with weed stocks, but you now only trade weed stocks certain times of the year, or if there's certain legislation coming up. Is that right?
Yeah. I mean, the problem with the cannabis industry right now, or the investors in the cannabis industry, is they are not very good at, one, reading a balance sheet, and 2, understanding that if a company beats 8 quarters in a row, they're doing something right.
Sure.
So a lot of investors have it in their head that the cannabis industry somehow needs legalization, somehow needs safe banking, 280E. Look, they've been operating and making more money without it, right? So I look at it as, one, I don't want legalization. I want legalization to be dragged out as long as humanly possible, because it won't allow me to do the things that I do to increase my position size size using nothing more than the market ranges and the seasonality.
Sure.
Two, like safe banking is good. It's kind of silly, but somewhere last year, everybody started thinking safe banking was like the end all be all, right? To kind of put it in perspective, in Q1 of 2021, this company Curaleaf, ticker symbol
Love Curaleaf.
CURLF, put up the biggest number that's ever been put up by a cannabis company in the United States or in Canada. It was 266 million, which was more than their previous quarter. So they just kept breaking the record. This last quarter, they put up a number of 312 million. They're going to be the first company to do like $500 million, $1 billion in quarterly sales. Yet, for some reason, the market's like, oh, it's too expensive. And they start selling it off. So what investors need to understand is right now, the multiple is crap. Okay. The multiple on all the MSOs are crap because they trade in an efficient market. They trade on the CSE and the OTC. They're not trading on the New York Stock Exchange or the NASDAQ like Canopy or Tilray. Canopy trades at a multiple of 20. Okay. Curaleaf trades at a multiple of 4 or 5, depending on the day, right? Yet, Curaleaf did 115 million more in revenue, doesn't have $1 billion debt, and has, positive margins. Canopy has negative 66% margin. So the only real difference is they trade on a major exchange. So the way I look at it is, at some point, these are going to trade on a major exchange. And when that happens, not only does the multiple flip, but the multiple meets something more like a CPG company or a consumer packaged goods company, which is really in a range of like 30 to 50. But because of the uniqueness, it should trade at a 50, but let's say conservatively, it trades at a 30. Okay. The TAM, so the total addressable market, is just getting bigger. You've got states like New York, New Jersey that are going to completely open up. New York will be the second biggest market next to California. So if it's trading at a 5 multiple right now, and the company is doing like more and more revenue, but their CapEx and their OpEx is improving, every quarter. Okay, so let's give it a 30 multiple. So what's 5 into 30? Okay, it's 6. Okay, so now multiply the price that it's currently at times 6. And then you've got, let's say it closed at 12 today. So 12 times 6 is 72. That's fair value for it. Okay, but right now people are shitting their pants, not realizing like, hey, you're buying a company that in the future is going to be worth, 6x.
Let me ask a question along those lines. I loved when you talked about how you paid yourself.
Yeah.
And you took some every week, you took some money out, and then you took some money and put into blue chips, like you said, Budweiser.
Yeah.
Are you putting any of your money into these weed companies now that you would consider like the long? Okay, cool.
Yeah. So I'll explain what I do. Okay. So early on, I would take 80% of my money off the table in March. Okay. Because we would always see that decline. And then I would buy back in the summer at a huge discount. When I was doing this, my portfolio was averaging like 300% return, if not more, from like 2016 to 2018. And as such, my position size got much bigger, so to kind of put that in perspective, in 2016, I bought Aurora for the first time at 89 cents. I bought 20,000 shares. I sold it at 3 for, 60 grand. So I made, 42,000 profit, whatever it was. That following summer 2017, I bought it for $1. Okay. But I bought 60,000 shares, and then it went from $1 to 10. And then guess what I did?
love this concept. I love the concept because you explained it as just free shares the way you did. I love it so much.
So, when all was said and done, a $20,000 position, and I don't want to sound like I'm boasting, I'm just doing the math. A $20,000 position became a $1.2 million position using the market's volatility. Now, if I had just held, I would have crushed it either way, but it would have become 240,000 versus the other thing. Now, I do this with everything. So in February, my rule is if your stock hits an all-time high in February, take 30% off right then and there. So when all the pot stocks hit in February, I took 30% off the table. Okay. Now that money is allocated for the summer, right? But from July until February, I'm trading these things. And I'm holding a core and trading a core, which is really what you want to talk about. So to give you an idea how it works, let's say I buy to start 10,000 shares of Curaleaf at $7, which was my entry. Okay, it was actually $7.15, but let's not split hairs. So it goes up to $7.50. All right, I sell 1,000 shares. It drops back down to $7.25. I rebuy 1,000 shares. I pocket the difference, $2.50. Okay. Now I look at that two ways. One, I'm setting money aside and almost using it as a dividend. But two, I'm keeping that money for a rainy day. All right. On top of it, I'm reducing my risk by 25 cents on at least 1,000 shares. Now it goes to 8. I do the same thing. And then I reload at $7.50. Goes to $8.50. Maybe it makes an overstretch move. Maybe I sell 2,000 shares. Okay. And then let's say it just gets crushed one day and it pulls back to 7. Now I just reload it. And then I use that capital from all of that trading to buy more of a position. And I do this while the market is liquid, while there's volume, while there's, some kind of catalyst or whatever. I don't just sit in a position. So there's a part of that position that I won't touch. In this case, it's, 80%. So 20% is what I'm playing with. Now, you're going to run into circumstances where it just keeps running and you're like, well, I don't want to go under. Well, there's something else to buy. And, a lot of these pot stocks trade, in tandem, meaning, one goes up, one's down, and then they do this. So what I do is I find the two that mirror each other, that are the yin and yang to each other. And then I sell this one up here and I buy this one here. And then this one goes up and then I sell it. And that really speeds up, I call it seesaw trading. Then that really speeds up the size of your position because you're just fully taking advantage of what the market gives you. Now, you think about if you're using this range over an 8-month span, the amount of shares that you can stockpile, and then the amount of risk. So to give you an idea, my entry on Curaleaf, call it $7, right? It would take Curaleaf going under $2 for me to break even.
So I love how smart this is, and also the patience and the plan. I'm a big believer in if this, then that. And you're like, if it gets to this, I'm going to do
this. Like, it's such a well thought out and developed plan, which is what I like about it so much. And there's just no anxiety. I mean, you just said Curly has to go to $2 for you to break even. Like, you don't have any trouble sleeping at night.
No, not at all. Not at all. You know,
it's so great.
And here's the thing. I mean, it's not just weed. You know, I get myself into positions all the time, and I'm too early. I get a little bit of FOMO, but as long as there's range, you can fix that position. You know, too many people, they're like, well, oh, you're going to get killed on taxes. You know, you can't look at it like that. Worry about that once you've got your entire position. Because when I'm buying stuff in the summer, I'm not buying it for right now. I'm buying it for a year from now because I want to be selling it. So like everything I'm buying right now is stuff I'm going to be selling in January 2023, you know, or November 2023, as long as it has a year and a day. Because one, it'll probably be the top of the market that year. And I'm getting an additional 20% on my money because I'm not getting taxed on it. You know, this market is, you know, they just love shiny objects. And as being somebody that traded penny stocks early, you know, look, I left a lot of money on the table by just doing stupid things like rolling it, not being patient will kill you. You have to develop your own little plan, your own little strategy, your own little set of rules, whether you're trading stocks or options. Yeah, especially with options, you definitely need a set of rules. If not, you get
How long did it take you to discover the plan, put it in place, and then stick to the plan?
You know, it really took dodging a couple bullets to kind of understand, like, hey, this could have been really bad. So, you know, one of those bullets was when I went on my honeymoon, I went to Cambodia and Thailand. And I was like, I don't want to be holding all these penny stocks. You know, I'm going to start taking profit. And I was like, these things are, you know, like every person trading penny stocks, they're going to $1.
Sure.
And I took a lot off. And I was like, I could always get back in, right? And the market crashed.
Oh, wow.
You know, and I avoided the whole thing. You know, now I'm sitting there with like all this, and I'm like, what do I do? I'm like, I can't buy these things. I was like, they look like crap. And then I'm like, but then also I'm like trying to understand. I'm learning about toxic debt, and I'm like, man, you stepped in like golden shit. So it really, like, I was an English major. It really just kind of came down to math, right? And it was always like understanding like how much you're down. So if something goes down 10%, you need it to go up 11% for you to break even. If it goes down 15, 20, 50, 100, you know, and then you start doing that and you're like, man, it also works the other way. Like if I sell this here and it drops 10%, I can buy 10% more. And then if it goes back, I'm catching a 20% move. And then you're like, what if I did this a lot? It's kind of like in Happy Gilmore when they were like, hey, you can make a lot of money. And then that music plays. That's kind of like the aha moment. Mm-hmm. And then you start looking at it, you're like, man, why wasn't I doing this all the time? And, you know, look, even in 2016, 17, 18, you know, look, I would say the same things. I go, look, market's going to pull back in March. And people will be like, you don't know what you're talking about. You know, in 2019, in March of 2019, I said, I'm out. I'm out of pot stocks and I'm short pot stocks. And everybody's like, you're going to get destroyed. You're such an idiot. Your time is done. The market dropped 70%. And most of those companies never recovered, you know? And in the summer, I was looking, because I took most of my money right before legalization. So, you know, if you go on Twitter and you type in like Wolf of Weed Street in the search and you type in October calendar, I made a calendar for what the market was going to do once legalization in Canada happened. And it was like on the month, it was spot on. I'm like, we're going to get a 20-30% correction. We got it, like within a week. So in the summer, I'm really flush because I actually made more money shorting pot stocks in 2019 than when I was a bull from January to March 5th. And I was like, man, I can buy all this back. I'm like, I could get 5 times the position I had in this, 5 times, I could get 3 times as much canopy, like all this stuff. And I was like, kid in a candy store. And I was like, you know what? I'm like, I think I'm a little too biased right now. I'm like, like my eyes are like saucers. Let me get a second opinion. So I hired a quant. Okay. So I hired a quantitative analyst that actually had a lot of the data. I'm pretty sure I paid him for something that he just cut and paste, but it was worth it. I was like, I wanted to know specific companies, what their value was if you sold it off for parts. I wanted to get an understanding of the dispensary counts in Canada, the foot traffic in the United States, all of this stuff. And, when he flipped it to me, and this is September, I was like, I can't get back in. I can't do it. So I didn't. And I didn't get back in until July of 2020. So I was out of the game for like a year and a half, pretty much. And it's not that I didn't like the MSOs. Some of them were newer. They had share unlocks, and I just didn't want to the market just wasn't there. And I was like, okay, well, we're going into a presidential year. Things change. And so a lot of the criticism I get, well, if you're so good, well, why weren't you buying Curaleaf at $3 in March? And I'm always like, well, idiot, I can't get leverage on Curaleaf. And we had the absolute best market for like that's ever been seen in most of our lives with COVID. I was like, they don't have options. I'm like, I'm trading, I'm making 1,000% on, weekly options. Why would I want to waste my time? And it's funny because I was still like gun shy about getting in because I was like, man, I should just stick with this market because it's paying so well. I'm grabbing Square at 40, Boeing at 90. The only 2 pot stocks I bought during the pandemic were IIPR at 50 and Power REIT at 770. And I don't have those anymore. And now they're up a little bit more. But, it was a Roku option trade where I was like, you know what? I got really lucky, or, I'd say I got lucky, but I'm not a chartist. So I always say I'm lucky. And, the thing went from 100 to 130. And I was like, okay, I'm going to use this to kind of, give me the cushion. And I rolled all that profit in.
A lot of times on the podcast, I like to get information on my own personal interest. And I would love to know your thoughts in the psilocybin industry, like mind, MNMD, mind medicine. What's going to happen with that? We've had a lot of episodes where I just feel like that's such an incredible industry that we will get to experience during our lifetimes. So I'd love to hear what you think about it.
I'm my wife and I are founding investors of Cybin.
Oh, I had no idea. So you're into it. You're into it.
So I think I'm one of the first people on FinTwit. And I started talking about it in 2019. I'll send you the tweet. I read a piece on MDMA being used for, it was a 15-year study for treating post-traumatic stress disorder. And I've eaten mushrooms, and every time I've eaten mushrooms, I've come out of it smarter.
Sure.
More relaxed. I mean, the first time I ate mushrooms in college, I went to the University of Arizona. I kind of went through my life and all the things that used to worry me, and then just came to the realization, like, the things that I worry about now are things that I'm not going to worry about a year from now, because I'll be alive. And like, if you're alive, then why worry? Right.
Yeah.
So yeah, and every experience I had was great. I never saw anything. I never took it that enough to go down the rabbit hole, so to speak. Never tried any of the really strong stuff like ayahuasca, which my sister went to Brazil just to take ayahuasca, which is nuts. But my personal view is it's going to be bigger than cannabis. So I think it's going to be bigger than cannabis for a select number. Now, I invested in Cybin. My wife and I invested in Cybin, I think at a $10 million valuation. I think it's like $400 million right now.
Wow.
So it was a lot of risk, right? Because who would have known that it would make it to the New York Stock Exchange and everything. And I'm also an investor in Atai Life Sciences. And you would think that I have bias because of position size in Cybin, but I think Atai is like this generation's Chipotle.
Okay.
Meaning, from a pure stock move perspective, I look at it like this. It's got a pipeline of 13 drugs. It owns majority stakes in 10 different companies. It owns 25% of Compass. It's backed by Peter Thiel. It's got first mover advantage. They developed a lot of the chain that all of these other companies would need to move forward. It's a $3 billion company right now. So everybody's looking at, they think psilocybin, they think, oh, they're never going to sell mushrooms, at 7-Eleven. Yeah, no shit. That's not where the money is at. The money is in biotech. So this always, convinces people. So I'm going to give it to the listeners. In the 1990s, which, I was around for.
Sure, same.
In the 1990s, Eli Lilly developed a drug called Prozac, which was a nasty drug. It was a zombie drug, and it was for treating depression. That drug was so successful, they were making $10 billion profit a year on it. Okay. It became a generic in 2004. Eli Lilly's market cap right now is right around $230 billion. 30% of that market cap is just from Prozac, a drug that they stopped making 16, 17 years ago. Okay. And it was a nasty drug. Talk to anybody that ever had to take Prozac and they hated it. And then they were off it. And then your other choices are lithium. Okay, who wants to take lithium? Nobody wants to be zombified because you're depressed. After COVID, the depression numbers, the suicide rates, everything is just going up, right? So now what if a company could come and, create a drug for depression that's clean, that doesn't leave you feeling like shit? It's derived from nature rather than a synthesized molecule of something that just dopes you up. So I think on just that drug alone, right? Let's say, so 30% of 230 is 70, call it $70 billion. All right. Now let's just cut that number in half. All right. Let's say $30 billion. At $30 billion, Atai is a $176 company. Okay. In a market that is like the adoption of psilocybin and DMT and ketamine and, MDMA versus like cannabis, it's light years ahead. I would have never thought it would be this fast, but the reason it's so fast is because the data is so fucking strong. So PTSD, you're looking at 80% plus success rate. They're using it for addiction. They're using it for anxiety. It's like if any one of those things happen and they come out with a drug, it's $100 company all day.
Yep.
Now there's the big one, right? And the one that nobody talks about, and it's the one that I'm like fantasizing about. It's dementia and Alzheimer's. It affects parts of your brain and stimulates parts of your brain that were dormant. That's what it does. That's why, it brings clarity. So what if it could mend and heal parts of the brain that have gone dormant because of, dementia or whatever? Or what if it could stop it in its tracks? What's a company like that worth?
For sure.
Now you're talking about like $1,000 company, like the kind of company that has to forward split because it's so successful.
For sure.
So, and I think that companies like Cybin, I like Cybin more, not just because I'm an early investor, but they spend money properly. They're not like, hey, let's do this study, and they don't own the patent on the thing that they're studying. So I think it's a really big market. It takes a lot of education for people in it. And it's not my job to educate them. And by all means, like, if you think it's a shiny object, sell it. I'm happy to buy it down here, because when I buy it, I'm not looking at it as like a $15 stock. I'm looking at it as like, oh, I just bought this stock for $15 and it's going to be, $100,000 someday.
For sure. I'm sort of doing your strategy of just buying these companies, like using all my profit from trading to just buy these companies.
Yeah.
I mean, 15 years ago, if someone had said to me that like weed will be legal and we'll have all of these medical, like my mom is at the drugstore buying CBD for her back. Like that blows my mind that we're there as a society. So it makes perfect sense to me.
Yeah. It's, look, it's, we're living in a time when prohibition is ending. And, look, if any one of us could go back 90 years to when, prohibition ended, like we would have been buying alcohol companies. The problem with the cannabis market, and even psilocybin to some extent, is you have people that shop based off of price. Okay, which is probably the worst thing you can do. They're like, oh man, Curaleaf is too much, Green Thumb is too much, Trulieve is too much. I can get more shares of this. It's $1. Okay.
Oh, is it SNDL?
Yeah. They're like, oh, SNDL, 68 cents, going to the moon. Like they can't do the math. Like this thing's got, like people are trying to tell me it's going to $10. I was like, it would be a $40 billion company. It's never happening. So you have to understand whether you're buying a share of Amazon, one share of Amazon, or, $3,000 worth of shit, you're still getting $3,000 worth of shit. And at the end of the day, the only thing that matters is the ROI on what you're buying. Now, you could play a penny stock, in the trips or, half a penny, whatever, and get more alpha. But you better be quicker than the guys that told you to get in, because, like the early people are the ones making all the money.
That was a very delicate way to say that.
I don't want to say front loading. But yeah, look, I know, like I've made my way from the OTC to the big boards to options to whatever. I'm happy. People make money. Like I'm happy. What I hate is because, guys from the old days still reach out to me. They're like, yo, buy this thing. I'm like, oh, okay. Yeah, I'll take a look at it. And they think I'm just going to come in. And I know that they're calling, saying this to 10 other people. And then I just see the thing get crushed. And I'm like, this fucking guy is trying to like have me come in with size so he could blow out into me, So it's like there are very few people, on FinTwit that I would trade penny stocks with. Very, like, handful, maybe like 3 people, that I know aren't going to try and screw me. But that's the risk when you're playing penny stocks. Like, you're going to get taxed at one point. You're going to, so when you do make those huge gains, buy real stocks with those gains. Don't roll those huge gains into the next pump. Okay, because look, at the end of the day, that's what they all are. They're all pumps.
Sure.
I mean, look, the whole market's a pump.
Sure.
Right? You've got to treat the market like a game of craps, right? When your number hits, you take some money off the table. You put it somewhere safe. Whether you're doing that with penny stocks or trading small caps or trading options. As soon as I really started to do that with purpose, because I trade a lot of options, right? And on like a Monday, I'd kill it. Let's say I was trading Roku, kill it on Monday. And then I get back into it on Tuesday. And then I'll give back, like 20%. And then the next day, I'll make 10%. And then the next day, I lose 30%. And then at the end of the week, I'm like, oh, wow, I made $5,000. But on like Monday, I made 10.
Sure.
So I should have just stopped. So now what I do is, every time I peel out of a trade, I'm putting it in something that I know is bulletproof or something that I want to own long. And, during COVID, so in September, I made the decision to stop trading tech and to only focus on reopening stuff. And everybody's like, why are you trading reopening trades? Nobody's flying. And I was like, exactly. I was like, what, are you going to take a fucking horse and buggy to go see your aunt? No. I was like, I'm not buying AMC. I go, what? I go, look, I haven't filled my gas tank in 3 months. So I'm buying Exxon from 40 all the way down to 32. I'm buying Alaska Air from, 45 to 36. I'm buying Spirit Air from 25 to 20. I'm buying Rite Aid at $11. And I don't care, because all it is profit. I'm just like, and I just don't touch it. I'm buying Budweiser. I'm buying stuff with dividends. I'm buying companies with good balance sheets that could survive. And then once that first vaccine news hit, everything was up 50%. But that money wasn't gambled and rolled into the next trade. So I take profit before this, I was taking profit twice a week. After this, I was like, there's too much money in here. And then I went to 3 times a week. And then even that wasn't enough. So, yeah, I mean, it's the smart, like the market, it really is an exercise in tortoise and the hare. Like I haven't been in the market that long compared to a lot of people, but I can tell you, like, if I would have done this years ago, like all those times, like I just got a little too cavalier with trades, I would have saved myself a lot of money. I would have made myself a lot more money, and I would have evolved better to be even better prepared for when we had COVID, or when in 2018, Powell talked about raising interest rates and the market tanked. So now as we go into a taper, that's what I'm thinking. I'm preparing now. And that's something I think that, look, you can't trade pennies all your life. You've got to graduate. And it can be done. Look, I put 10 grand into the market in 2013. And, my perspective is I've been living off of that 10 grand ever since, and, yeah, I mean, all this Star Wars shit, paid for with the stock market.
I learned so much from your interview and so much enjoyed going through it again, because before I heard it, I was just like, you make the money, you keep it in your account, you take another trade, or you pay yourself. It had like growing the bigger portfolio, or more having a long term, I'm just living for the next day. Like, oh, what's going to be running tomorrow? Or I really like the long-term approach and the ability to be in the game for a long time.
Incremental growth is so much better because, once I started doing that, my losses got really, really small, like exceptionally small. And my wins just got bigger. And I took taking the more conservative approach. I mean, it was like my account just did this because I was taking less trades and focusing more on ideas, and that's how I look at it. It's like, I'm an ideas guy. Like I'll get paid for my ideas versus oh, look at this chart. I trade on my phone.
Nice.
So I don't trade on a laptop. I don't have a crazy setup. I trade on my phone because I find it easy. I find it, it's just simple. I can see everything that I need to. I've got an app. I watch the real-time trades and everything. I can read level 2. If I need to chart, I can do that. I can recognize things. But a lot of people, they try and focus a little too much on, I need this giant rig and I need to be able to see this and that. I need to be looking at 2 things when I'm trading: the SPY, QQQ, and whatever I'm trading, and understand the cause and effect and what's going on in the market. That's it. That's investing, right? And when you take that tiny, where your whole job is to just hit singles, all that shit just starts adding up and it compounds. And then before you know it, not only did you not lose money, but now you're more profitable than you've ever been. And you'll say to yourself, you're like, holy shit, did I just learn how to trade? And that's what happens. I always tell people, because a lot of people, in True Trading Group, which is my service, I do one-on-ones, and they're like, I want to learn how to trade options, and I'm like, okay, I'm going to start you off with the most boring option, which is US steel. And now that's all they trade. They don't even trade anything else. But using that model, I go, look, when we get into a trade, I want you to take 50% of that profit and I want you to put it into some stock that you just always wanted to own. I go, look at it as the market saying, here, I'm just buying this for you. That way you don't gamble it. I want you to take 25% and pay yourself. Okay? You can pay yourself, you can put it away for a rainy day. And then the other 25% is just to increase your buying power, because you don't want to have so much money that you do something stupid. You want enough money to do something, and the picture behind me, one of my members said this, and he's like, I want to learn options. And I was like, no, because he bought some stock and it ran, and he's like, I don't know what to do. And I was like, sell it. He's like, why? I'm up this much. I was like, yeah, you're up 300% on a gamble. I was like, just get out. And, and the thing ended up tanking. We put it into a bunch of safe stuff. And then he just kept on growing it and growing it and growing it. And, there's something to that, because you don't want to get rich on a screen, right? Getting rich on a screen is probably the most depressing thing in the world. I've seen it before. In 2016 to 2018, I saw so many people that they had all these pot stocks and they were killing it. It was like their own little ETF. And then when all was said and done, they had 7 figures at one point and then 50 grand at the end of the day. And that's just a tragedy. Mm-hmm. You have to have a plan. You have to stick to it.
I just love it so much. It's such a great strategy. So I'm going to make you the pledge that I'm going to start doing more of that. Now, I'm not making a ton of money. I can't do a lot of that right now, but you are my goal. And ever since I heard you, I was like, that just makes sense to me.
Do you trade options?
a little bit, but it's sort of like CCL is my favorite stock, and I just watch it and watch it and watch it. And if
Okay. Well, all right, ready? Here's a lesson.
oh,
Okay. So everybody should have a stock like that in different sectors. So CCL is transportation. So look, this is how penny stocks I am. This is the iHub app. All right. Everybody that trades penny stock has the iHub app. So I got my monitor. This monitor has 90 stocks and it's called Corona Volatility. But then I go like here, and then I go, where is it? Transportation. And then I have my transportation monitor. So then I watch the transportation stocks. I got tech. I have dividend. I have my long positions. So in watching CCL, you understand the ranges probably better than anybody.
yeah, I'm
Now, when you're trading options, okay, the problem that most people trade when they trade options is they're not allowing themselves enough time. Okay. You know, with US Steel, I used to do this. I used to trade like a 2-week out option. Now I'm trading 3 months out, right? Because I know I'm not going to get burned. And it's been one of the biggest money makers for me since September of last year, or since COVID. You know, I mean, the thing went from $5 to 30 and just trade in the range. So if you understand, hey, like CCL moves like within like a 50-cent range every day, times of the day, what does it move with? Buy an option like 50 cents or $1 out. You know, like obviously the further out you are, the more time you want.
Mm-hmm.
Never sacrifice price for time when it comes to options. Okay. People will be like, oh, well, this one's 20 cents. It's 20 cents because it's for suckers.
Right.
Okay. A lot of people, when they trade options, you know, like, because it actually happened to me today with Roku. I stopped out of my 315 calls that I had for next week because I was like, I'm just getting buried on this. And I got out of my 310s with like not even 10%. And then they ended up going like 60%. My 315s ended up hitting and I ended up selling. And then I looked at the end of the day, and when all was said and done, I made like $300 on the whole thing because I took the loss here, but it should have been a monster day. You know, sometimes you're going to try and fight the market, you know? So what you say to yourself is, it's not that I'm wrong. It's just that my timing is off. Now, when you use the strategy we were talking about before, like hold the core, trade a core. So let's say you get into a CCL option at $2, okay? And the market starts going, and then all of a sudden you see the yield curve go up, and SPY and QQQ start taking your shit, and you're like, oh no. All right, I'm going to get out of this. And you get out of it at $1.50, okay? Now you had 10 contracts at 2, so you just lost $500. But you're like, I still like this trade.
Mm-hmm.
I still have a lot of time. It gets down to $1, and then all of a sudden you start seeing everything settle down. Now, what you do is you buy 15 contracts at $1. Okay? You just use the same money. Now you can use the same money and get into the same strike, or you could use the same money and get into a lower strike. Never add money to it. Okay? You're taking enough risk on with what's happening.
Uh-huh.
Take less risk. Okay? Always less risk. Like if you always say to yourself, well, if I was looking to get in this position, would I get into this strike? Or what, like, is this kind of overdone? Like there's no news, everything's good, things are starting to open up. This is just a broader market move and it's just getting sucked in with it. So let's say you just buy the 15 contracts at $1. Okay, well, you're down $500 and all of a sudden you start seeing CCL. It starts going up. Now it gets to $1.50. Well, guess what? You're not only even, but you're up. You're up $250. Okay, so that first 10 contracts, took care of what you lost on the move from 2 to 150, from 1 to 150. Now you've got 5 contracts left. So you sell the 10 contracts at 150. Okay.
Mm-hmm.
Then those 5 are profit, 250. You can take it. All right. Maybe you wait for a pullback. And then you start to see, oh man, this thing's bouncing. So let's say you take the 10 and then it goes back down. Well, now guess what? Here's the thing. Now here's the trick. Okay. You ready for this? You buy the same strike. You just buy it a week out using the same money. Because now you're taking less risk with more time. Remember, time is the most valuable thing when you're trading options. And you still have those 5 because then the thing can run. And then the 5 go to 2. You've taken all of the risk out of the equation. Like one of the options I would suggest right now is CX.
Okay.
Okay. It's Cemex. It's a cement company. It's probably the most boring stock you'll ever see. Get $7 January or December calls. Okay.
Okay.
And if you lose money on it, just tell me and I'll send you whatever you lose, but you won't lose. So I'm never going to have to send you the money. Every time that thing gets down to like 7 or 750, I mean, it just got caught into this whole pullback. And now with infrastructure, I'm also in US Steel $25 January calls. I think that's a no-brainer. They're trading at like $1.70 right now. That boring shit is the moneymaker. And it's not like Roku where you have to watch it all day. Like 2 weeks ago, I had to sign a power of attorney and I was trying to do it on my phone. And then I was like, I got to pull out my laptop because my, Sign Easy wasn't working. Took me 2 minutes to sign it. In that 2 minutes, Roku dropped like $5.
Sure, it did.
And I was like, all right, I just got stopped out by an email. Use look, and once you find an option that's boring, like US Steel or Cemex, I never traded a Carnival, even though my wife's friend, her name's Kelly Harrison, her family founded Carnival. Then they also own the Miami Heat.
Oh.
Yeah.
Well,
we're shareholders at like $8.
Ooh. My entire thesis for Carnival is you're not going to keep Americans off a cruise ship. You're just not going to. Like sickness, whatever. Like as soon as people can get back on a cruise ship, they're getting back on. And that's my whole thesis.
Yeah, and our whole thesis was either they're going to get a bail. I'm like, they're not going to get a bailout from the government. I was like, they can bail themselves out. Yeah, and it's like, who is it? It's like Carnival, Royal Caribbean, Norwegian. One of those is saddled with a ton of debt. One acquires the other. It's just more. People love fucking cruise. I hate cruises.
People love to cruise. I hate a cruise. I can't cruise. Americans love to cruise.
Middle Americans love cruise. Like I can hear the cruise ships from my house. I'm like, fuck. So yeah, there you go. You just got your first options lesson.
Thank you so much. So if I want to learn more from you, which I think I do, where do I find you?
So we have this thing. It's called TrueTradingGroup.com. Okay.
Okay.
So it's 7 moderators with all different specialties. Some options, some small caps, some mid caps, large caps, whatever. My specialty is really whatever the fuck I want. I trade ideas. And it's really cool, but it's not just like I don't want your people to think that it's like just a chat room, because it's not. It's a complete platform, real-time data, There's a simulator for trading stock or options. There's courses. I mean, we even give you tests that we force you to pass. And every time you pass, you get a badge. Once you've gotten all your badges, you're TTG certified, and then you're able to get into more things. But we do webinars, and think of it as like Netflix for trading. So there's no real upsell. You can do a 7-day trial. It's free, and then check it out. And then we're in there, all day. It's a lot of fun too.
Sounds like a lot of fun.
We've got close to 8,000 members. In any given day, there's 2,000 people in chat. We also have like Benzinga Squawk. Mm-hmm. So we're getting real-time news as it pings the market. It's cool, So that's where you can really learn. And we also have a YouTube channel that's every night, and that's 100% free. And you'll learn a lot of shit there too.
Cool. I'm currently doing a self-imposed, I cannot be on Discord. I can't be on Twitter except for DMs. I cannot receive any information about the market other than I have a trade idea scanner and I have my Thinkorswim scanner, and that's it. And I'm just trading in it. And it's been quite the experience. I've really liked it.
Really?
Yeah.
See, I mean, maybe it's the things that I'm trading, but I'd really like to see what everybody's saying and try and understand the sentiment that's out there and the market psychology. One of the things that, there's a really good book you should read while you're on this self-help kick. It's actually 2 books. One book is called Animal Spirits. Mm-hmm. And the other book is Markets, Mobs, and Mayhem by Robert Menschel. Robert Menschel was one of the first partners at Goldman Sachs. Incredible book. It's out of print. You can find a PDF of it online for free. You just got to search. Mm-hmm. But you can buy it used. Those are the only 2 books that I've read about the market. And especially right now, with everything going on, and especially for when I was trading cannabis, understanding the market psychology was, as a trader, it was like fishing with dynamite. Understanding the frustration, the FOMO, what people are going to do next. Because, at the end of the day, the market is just a massive game of musical chairs. And it's okay, well, when's the music going to stop and how many chairs are going to be left? Right. And, but I want to be able to kind of see or hear when that music is going to go off quicker than the next person. So it's really good for just kind of understanding, market fluctuations and, why people do the things that they do. Because remember, look, at the end of the day, I hate when people are oh, you got to be a robot when you're a trader. It's bullshit. It's complete bullshit. I made money on Roku, and I am so pissed about how much I made on Roku. It would have been better if I lost money and I was I just did the right thing, because we're all basket cases, and, that's going to influence what we do tomorrow. Is it going to influence us to the point where we revenge trade profits that we had yesterday to get back, Yeah, it's a really good, a good read. So let me know how it goes for our book club.
Oh, perfect. I'll read it. I'm a big homework. That's sort of why I'm doing this thing, because I just wanted to prove to myself that I was seeing the things that I was seeing and not being influenced by anyone else. I needed to test myself so that I could confidently say, I see this, or
Yeah. I mean, how long have you been trading?
18 months.
Fuck. You in this podcast alone, you learned more than I learned in 5 years. And that's the truth. I was so fucking dumb. Like, I have no idea how I'm not working a 9 to 5 right now. I have no idea, and it's like, especially for the people that find it early, right? You have your whole life to trade.
Yeah, I'm like 40 though, so I'm trying to learn these things, and I'm just not where I was 20 years ago.
Yeah, like little by little.
Little by little.
Little by little.
Well, thank you. Thank you so much for your time. And I like you. I like your energy. I like your whole style. I'm a big fan. I said at the beginning I was a big fan. And this was such a treat for me to get this one-on-one time with you. So thank you.
Thank you for having me. It was actually a lot of fun.
We'll do
it again.
So glad. Please. I have 50 more questions I could ask you. So we'll get another date scheduled.
You got it. Thank you.
Thank you so much to Joel Edwards, our producer, and Chesley Lowe for the banjo music. Bye.